Thank you for staying with us. We take you now to the stock market, where the Nigerian Exchange Limited listed federal government of Nigeria $4 billion. That's the federal government Euro bonds, 171.7 billion naira savings bonds, and 720.04 billion naira securities on its platform in January 2022. The listed securities on the bourse in January are BUA Foods, 720 billion naira listing by introduction of 18 billion ordinary shares of 50 kobo each at 40 naira per share on the main board, and Nigerian Breweries PLC's listing additional 78.9 million ordinary shares of 50 kobo each, emanating from the company's 2021 scrip dividend option. The new stocks of Nigerian breweries were issued to shareholders as part of their dividend payment, according to the disclosure from the Nigeria Exchange. Nigerian breweries listed a total of 78.9 million ordinary shares of 50 kobo on the platform, increasing its total issued and fully paid up equities to 8.08 billion ordinary shares from 7.9 billion ordinary shares. Now let's take you through a summary of what happened in the stock market yesterday. Now, the all-share index closed at 47,203.39 basis points. That's a loss of 0.16%, while the market capitalization closed at 25.43 trillion naira, a loss of also 0.16%, at a volume of 285.47 billion shares, and that's a 26.49% gain. The value traded 5.12 billion naira, 115.02% increase. And the number of deals 5,342. That's a 30.52% gain. Now, for the sector movement, looking at the sector analysis, the NSE 30 closed at 1,087.68 basis points. That's a loss of 0.01%, while the NSE banking closed at 442.3, a loss of 0.51%. NSE insurance 184.76, an increase of 0.19%, while the NSE Industries closed at 2,136.69 basis points, an increase of 2.68%. NSE Oil closed at 423.74 basis points, an increase of 1.43%, while the NSE SM 670.65 basis points, an increase of 0%. Now, to further analyze the markets and what went down is Ambrose Omodion, CRO, Invest Data Limited. He joins us right now via the phone. Thank you so much, Ambrose Omodion, for joining us.
Yeah, thanks for having me.
Now, looking at the sector, equities market year-to-date performance rose above 10% since January, but the recent bear of volatility seems to be creating panic in the market. How do you react to this?
Yeah, I would say the whole core pullback should not create panic in the market, because yes, there's increased volatility in recent days that have caused about 2 days profit taking to linger in the market. But for me, that should not send any panic to the market at all, because the factors that brought the market where it is are still intact. The major factor that brought the market where it is earnings season, because you can see that most of the stocks that release most of the companies that release their numbers were positive. And don't forget that where the market is today, there's a lot of those about 5 high-cap stocks that really has about almost 70% impact on the market are the one leading the index. For me, yes, if you look at index has rallied up above 47,000. But most of the stocks that are really cheap, blue chip stocks are dividend paying that are consistent. I will tell you, most of their position are still undervalued. Despite that, the volatility has given impression of overvalue of those stocks. No, most of them are still undervalued, because as we speak now, I will tell you that the market price to earning ratio is around 7.0.5x, while the average or the market dividend yield is also around 5.82. Tells you that these stocks are really undervalued. That means any investor that takes position now for dividend, I think they are taking at the right time, because we expect that between And from today, the end of the month of 1st of March, we expect more companies to leave their corporate action, and that will also change the face of the market. But again, if you have made profit in the market, nothing stops you for taking your profit away and also move to another stock. That's why these 2 days we are seeing the market lingering in terms of no profit again. It's welcome development because markets are running from January. Almost last week, almost like 6 weeks. Don't take profit at this point. It's not a bad decision, and it's not what to send panic to the market. Don't forget that as we speak now, oil price in the international market is still trading around $92. It tells you that we are still in a good mood. The company's fundamental are in on, and also we are seeing that the CBN have left the rate unchanged. For me, all we are seeing now is nobody taking. This should not send any form of panic to anybody in the market, especially if you know what you are doing in the market.
So it's a good sign for investors.
Yes, as market, as the stock pull back, it's for you to buy low. Because I say limited that the mantra in the market is buy low and sell high. And there are two types of traders and investors in the market. Traders and investors. These are people that control the market. If investors are taking an opportunity of pull back to buy for dividend, and also because traders are selling because they want to take profit, then investors take opportunity to buy to accumulate to get more dividend at the end of the day. Yeah.
Now, the insurance sector went up by 0.19%. That was yesterday, Monday, reversing the previous loss. What are the movers in this sector?
Actually, from yesterday index, unless what I have here is not correct, I saw that it's only the banking sector that was up yesterday about 1 point something there, but for insurance about 0.484 down. But no, I don't understand if it's because of people are taking interest on insurance. But for me, I think that people are selling those local stock now to position for those companies that they have companies that they pay dividend. At the end of the day, they can come back to insurance. So I see for almost like 2 weeks now, insurance stocks have suffered losses because people are selling off those local stocks that their dividend payment is not consistent and they are not selling to be. That's why they are moving to other stocks. Especially, you see what is happening in banking stock. It tells that the market have reckoned and also come to understand that that sector is the most consistent sector in terms of dividend payout. That's why they are still going there to position a stock like a DTB, stock like Access Bank, UBA, Zenith Bank, Fidelity, because these banks are consistent in dividend payment. That means as they are seeing their result already, they are actually accepting their result already. They know that dividend will come with it, between now and end of the month. For that, you see that activities in the banking sector is more now compared to other sector. But we can see that for last week, banking sector is among the stock that top the cleaner. Even as at yesterday, Monday, it's among the items that people are looking at having interest in banking sector. Why for that of oil? Why this is too nice? Because people took profit from step plants. And that's on the time for that's why you saw a little pullback in oil sector. People took profit in step plant and Wando yesterday, and that put that was down. But for me, I think that industrial sector was unchanged because no activities in major movers in that industry. I believe that the market is very, very balanced for any investor to take a position at this point. Rather, let your goal guide you. And also don't forget that when there is high volatility, there is risk associated with that volatility. That means you need to invest wisely. Let's say, allowing your stop loss to guide you at any given time you are buying stock in the market.
So is the Nigerian economy or the Nigerian populace now buying into insurance from the look of things?
No, it's fine. No, we have come to that stage in Nigeria that yes, we understand the role of insurance, and many businesses today are insuring their business because they know that nobody can predict the next 3 months. For that, you need to take some insurance coverage or cover. But what matters is that as you speak now, because those insurance companies, their prices are low, and their dividends are not consistent. It doesn't mean that they are not performing. Yes, they are stranded. Most of them posted good numbers, but their payout is very low, and even compared to the price. For that, people are exiting those positions in insurance. Not that they are running not to come back to take advantage in the market, because in equity investment, you move to where it's opportunities for you to make money. But I see another opportunity also coming in insurance company, but not immediately because we're already in any season. The factors have to take where can we make money in this season. That's why trading any season is very important, and it's another way of creating wealth for us because it comes 4 times in a year. This is another one we're seeing for this first quarter. Another one will come and I want to enter second quarter. That's why every trader investor don't play with any season because that is the time there is high volatility, there is high liquidity, there is high momentum, there is high sentiment. That's why this season you see a lot of activity going on. You can see that volume has gradually started increasing before it slowed down yesterday and not last Friday. That this volume tells that people are coming back to the market to take advantage of any season.
The volatility in the market seems to be suggesting that there might be a significant pullback given the volatility. How do you think investors should position themselves for this?
I've said it earlier on this program that when you see market varying up, as an investor, expect that there will be correction at any time. That means if there's the correction, your stop loss should be your number one target. You have the objective or your stop loss that any time you enter a stock and you touch your stop loss, that things that attracted in those companies are not there, you quickly jump out of the position and move to another one. You must not hold stock because we don't hold stock as if we are holding or we are married to stock. Nobody married to stock. We are there to make money. Once you see that what attracted you are not there, you will probably just sell off. But if market is pulling back on profit taking, you don't need to panic because you know that it's profit taking. But when there is fundamental change, yes, that's very panic. But when it's just profit taking, which is expected in the market as a rally for almost 6 weeks, you don't need to panic at all.
So what are your predictions for the rest of the week?
Yes, I said it earlier that also we expect a mixed performance for this week. Also last week we repeat itself. Yesterday the market started on a bearish note. Yeah, we expect that within the week information that will come to the market, especially corporate action that will come from the big names and also those companies that do not release their unaudited account for January will change the face of the market. And also if oil price also move above $95, it's going to be a plus for us. Don't forget that the mature economy where they're having their tensions, because of that, price of oil are likely to go up. If that happens, despite that here we are recording our star result is declining, we believe that when oil price goes up, it's a plus for Nigerian economy and for the market.
So it means the bears will be taking over?
Yeah, the bull will take over immediately in very short time, depending on the numbers that are coming and also the payout of this company. I told you that this average yield for the market, the dividend yield for the market is around 5.82. That tells you that here it's above everything that you are seeing in TGB. All the tenors in the short term and the long term 1 year, it's above it. That means people can easily move to equity space to make a shorter return and also come back to their fitting composition later in the year.
All right, thank you so much. That's where we'll leave it. Thank you for the robust analysis. I'm Bruce Modion, Chief Research Officer at Invest Data Limited. Thank you so much.
Yeah, thanks for having me.